Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today. Hello everyone, looking at Facebook daily weekly 5-minute time frame. So the bulls did show up today, but it was a lower high and a lower low, same as we saw in the overall markets. And there was an upper wick of profit taking by the end of the day. So the key resistance level on Monday is going to be this lower Bollinger Band. It's going to drop down pretty significantly, and it will be in the mid 121s. You want to update this level at the open because more often than not, after we see a dump, the first reaction to the lower Bollinger Band resistance is a rejection. So we know if the bulls close above that level, it will show strength, and if they reject from that level, we'll be looking to backtest the supports we're building down here in the low 119s. So the upper wick today, we rejected from 121.93, and that level will be above where the upper ball or the lower Bollinger Band is on Monday. So the bulls essentially are going to have to form a higher high and break the high of today in order to attempt to confirm this is a bullish reversal candlestick. You have to take it with a grain of salt because of the upper wick of profit taking. But if we do see continuation on Monday, we will confirm that reversal candlestick and we'll look to head up towards the gap. The weekly time frame is very weak. There's not much lower wick at all. The bears are in absolute full control, losing the 10-week and middle Bollinger Band supports. And the 50-week is a must hold. Look at how we've held that in the past. Dump in August 2015, dump to start 2016, both held that level. So 115.26 is an important support to maintain the channel of strength that we have over the past couple of years. And looking at Facebook on the 5-minute time frame, there was a trading opportunity in both directions today, just like there was in SPY. And the bulls showed up first thing. They had a strong candlestick, rejected from the 200 period, but they gained it the next candlestick. Then we pulled back, established support, and then continued higher. And what stands out is the big bull volume compared to the decreasing bear volume. So you can see decreasing bear volume, increase in bull volume, decreasing bear volume, increase in bull volume, increase in bull volume. So then we headed higher highs and we saw a nice move to the upside. There were some nice gains to be had there. Essentially, we went from the low 119.25 all the way up to 121.93, almost a $3 move in 2 hours. So there was some nice gains there. Then the bears stepped in. Red flag number one was losing the 20-period moving average support. And from there, compare the volume. Look at this bounce attempt. So we pulled back, established a low at 120.75, and then tried to make our way back to the high. But look at the very weak volume on this movement during midday, trying to get back to that level. So there's no way you're going to hit a new high of the day on this volume. You're going to have to see some increased bull volume and some big moves to get momentum back towards the high of the day. So we formed a lower high at 121.69. Had a question in the chat room today, is this a cup and handle that was forming? And by the time they asked, we had already lost the 20-period support here, and the handle was too extended, and we also didn't get close enough. I would like to see a closer move on the right side of the cup with a rejection from the high of the day before we consolidate and then break out. So it was not a cup and handle pattern, and that was proven as we continued to pull back, broke the low, so then we have a lower high and a lower low, and weakness into the close. Checking in on the hourly chart because the bulls need to get the 20-period moving average as support in order to see the bounce play out, and we did do that the first candlestick, and we did hold that by the end of the day. So this 20-period moving average is going to begin ascending, and the bulls need to go with it. 120.45. We'll see where it opens Monday pre-market. But if the bulls can backtest and hold these levels and then break the high of today, 121.93, that will be the start of a nice little uptrend. So keep an eye on the hourly 20 period and keep an eye on the daily lower Bollinger Band at the open Monday. I appreciate you watching and hope you have a fantastic weekend.